What employees and employers need to know. Bullseye hook, 15 seconds, thinking about getting an MBA or EMBA. Before you assume it's tax deductible or tax-free, let's talk. Because education expenses can be deductible, sometimes, and taxable, sometimes. Let's break it down clearly. Graduation cap. Section 1. Can individuals deduct MBA or EMBA tuition? Here's the general rule. For most W-2 employees, MBA or EMBA tuition is not deductible on your personal federal tax return. Why? After the 2017 tax reform, unreimbursed employee business expenses are no longer deductible for most employees. So even if the MBA helps your career, you typically cannot deduct it as a W-2 employee. Checkmark the exception. Self-employed individuals. If you are self-employed, education expenses may be deductible if the education maintains or improves skills required in your current trade or business, and it does not qualify you for a new trade or business. That second test is where most people get stuck. Facts matter. Office building. Section 2. What if the employer pays? Under Internal Revenue Code Section 127, employers can provide up to $5,250 per year in educational assistance. Right finger. Up to $5,250 per year is tax-free to the employee. Meaning, it's not included in wages and not subject to federal income tax. What if the employer pays more than $5,250? If the employer pays more than $5,250, the excess is generally taxable to the employee, unless it qualifies as a working condition fringe benefit. That depends on whether the education maintains or improves skills needed in the current job, and does not qualify the employee for a new trade or business. If it meets that standard, amounts above $5,250 can also be non-taxable. If it does not meet the standard, the excess is treated as taxable wages. Important. If you believe your tuition reimbursement qualifies for tax-free treatment beyond the $5,250 allowance, make sure you keep documentation to support your tax position in case of a potential audit. Generally speaking, the federal tax statute of limitations expires 3 years after the tax return due date, so documentation should be retained accordingly. Briefcase. Section 3. Can the business deduct it? From the employer's perspective, education payments for employees are generally deductible as a normal business expense. For self-employed individuals, if the MBA or EMBA meets the maintain or improve skills test, it may be deductible as an ordinary and necessary business expense. Bar graph example. $120,000 EMBA split between employer and employee. Let's run a simple example. Assume total EMBA tuition is $120,000. Scenario: employer pays $60,000, employee pays $60,000 personally, employee's $60,000 out-of-pocket payment. If the employee is a W-2 employee, that personal payment is generally not deductible on their federal return, so it is paid with after-tax dollars. Employer's $60,000 payment. The first $5,250 is tax-free under Section 127. The remaining $54,750 depends on qualification. If it qualifies as a working condition fringe benefit, the full $60,000 may be non-taxable to the employee. If it does not qualify, the $54,750 above $5,250 is added to the employee's W-2 income as taxable wages. Brain quick summary: W-2 employee paying personally? Right pointing arrow, usually not deductible. Employer pays up to $5,250? Right pointing arrow, tax-free. Employer pays more? Right pointing arrow, taxable unless it qualifies as a working condition fringe benefit. Employer generally deducts what it pays as a business expense. Checkered flag ending: if you're negotiating employer sponsorship for an MBA or EMBA, Understanding how it will be taxed is just as important as negotiating the reimbursement amount. Thank you for watching. This video is provided for general educational and informational purposes only and does not constitute tax, legal, investment, or financial advice. The information presented is general in nature and may not apply to your specific circumstances. Viewing this content does not create a professional-client relationship. You should consult your own qualified tax or financial advisor before making any decisions based on this information.